Dear ladies and gentlemen, Rational AG is celebrating its 25th anniversary of its IPO. We are happy to present an interview with the CEO, Dr. Peter Stadelmann. Please enjoy.
Dear Dr. Stadelmann, thank you very much for taking the time, and congratulations on the 25th anniversary of Rational AG's listing on the stock exchange. What does this day mean to you? And do you remember what you did back then?
Thank you very much for that. We can indeed look back on a 25-year period with satisfaction and pride, but even more so on the more than 50-year success story of our products and services for our customer. And to be honest, since I didn't know Rational at that time, I unfortunately can't remember what I did back then on that very day.
Rational is one of the frontrunners of the around 40 remaining shares from 2000. Its issue price has increased almost 40-fold. What do you think is the reason for the stock's long-standing success?
At Rational, we focus on customer benefits. In other words, in line with the bottleneck-focused strategy, we are pooling all our strength to solve our customers' biggest problem, their biggest bottleneck. Our customers are companies that prepare food commercially, and their biggest bottleneck is and remains cooking. Currently, the biggest bottlenecks are a lack of trained personnel and high energy and food costs. And that's where our intelligent, energy efficient, and versatile cooking systems can help perfectly. And finally, that accounts for all of the shown groups, more or less.
And what does that have to do with the share price?
For this, let's take a quick look at our mission statement, which is our guiding star for all at Rational. It is written, and I quote, "Growth, stability, and profit are not objectives, but results. The better the benefits for our customer, the better our growth, our stability, and our profit." So you see, in the middle of all actions, there is the customer benefit, and just then comes the profit as a result. And since the most important driver of share prices in the long run is company profits, the share price development is in principle nothing more than an indicator of the extent to which our customers are satisfied with our solutions and with ourselves.
Sounds very interesting, but also unusual. Do your investors see it the same way as you do?
Yes, most of our investors are also long-term oriented and have usually been invested for many years, and they share our attitude towards customer benefit. They are not oriented towards short-term profit. For them, the long-term potential offered by our niche and the high profitability are decisive. And these investors are also the best fit for us.
Your analysts also highly praise you in their research studies.
That is correct, but there are also critical voices on the stock valuation. With a PE ratio of 40, our stock is not really cheap, but I would say everyone is very convinced on the high quality of the company, our extraordinary market position, and the future potential, after all. The analysts also talk to our customers, competitors, or dealers, and so get a comprehensive picture of the company. We are happy about good feedback, but sometimes also critical questions come up. These are even more important to us because then they allow us to identify improvement potential.
Many stocks have disappeared from the stock market or suffered huge losses. Why does Rational stand out so much?
I think the hype of the dot-com bubble raised hopes among investors that were very unrealistic from the very beginning, especially for technology stocks. Established, boring companies like Rational were not that attractive at that time. Rational, sexy like Pichelsteiner stew was one not very nice headline we got back then. But in the long run, the benefit that a company can offer to its customers determine success or failure. By the way, this is a quote from our founder, Siegfried Meister, who unfortunately passed away in 2017.
The high share price might be seen as an obstacle to trading. Why don't you do a stock split?
We don't see much benefit from a stock split. And in the meantime, you can also buy fractional shares, for example, in saving plans. We see this high share price above all as a sign of corporate quality. There are also some prominent examples with much higher prices.
In the meantime, the Rational share has also suffered significant price losses in various crises. What do you think was the reason for that?
When the markets collapse in severe crisis, the share prices of the most solid and promising companies are also dragged down, especially in the case of well-performing shares. Accrued profits are then taken. The collapse leads to liquidity traps for some investors, which then puts pressure on all shares. The quality then becomes apparent after sell-offs on the stock markets. Companies with good prospects for the future recover much faster. Many investors find the stock in general too expensive at any time. They are waiting precisely such shocks and hope for good purchase prices.
Was it not similar during the Corona crisis? At that time, the share price dropped by approximately 60%.
Yes, exactly. The Corona crisis has hit our entire industry and our customers very hard. In normal crisis, people still go to the restaurants or canteens, eat cheaper dishes or order one drink less. In the Corona crisis, however, this was not possible either, and the gastronomy and communal catering were closed completely. This has also been referred to as the black swan for Rational.
How did you manage to get through the crisis so well?
Even in that severe crisis, it has become clear that people do not cook more at home than usual. It was then ordered from delivery services or food was taken away from a supermarket. This means it was then still prepared in our products, just at different locations. And as the business recovered, the share price rose again.
Moreover, you even launched new generations of products into the market during this period.
Yes, perhaps the most frustrating thing during this time was that we had to do the entire launch campaign virtually and not with larger customer and dealer events as usual. But even under these conditions, the campaign was a huge success. The introduction of the iCombi and the iVario helped us during this time, and the share price reflected this also.
After the COVID-19 crisis, another crisis emerged, marked by significant supply bottlenecks, which you managed effectively. What were the key lessons learned from these challenges?
We have used these crises to position ourselves more flexibly. For example, we have built up additional suppliers for some key components to reduce our dependency. In sales, but also in internal processes, we are now much more digital now and use the advantages of team meetings, online cooking shows, or support from artificial intelligence in planning and production processes.
Mr. Stottleman, with an EBIT margin of around 26%, you are sometimes compared to software companies. How has Rational attained such impressive margins?
Again, the key is high customer satisfaction. High value for customer comes with high margins. And I can tell you of one investor with a customer satisfaction oriented approach. One of their KPI is gross margin. With a gross margin of close to 60%, we are the perfect investment for these investors. This high margin, on the other hand, gives us enough playroom for activities supporting customer satisfaction. And the high EBIT level is then just a consequence of the high gross profit.
Can you maintain this remarkable success story with robust growth and substantial margins?
On the one hand, we have a market share of close to 50% globally. On the other hand, around 75% of our potential customers do not yet use our cooking systems, especially in overseas markets. So our task here is to train and convince potential customers of the advantages of the products through tailor-made sales activities. At the beginning of 2026, we will also introduce a new combi steamer to the Chinese market. But with the new iHexagon in particular, we achieved a breakthrough at the beginning of 2024 by enabling us to intelligently switch on microwave technology in addition to steam and hot air in the iHexagon. This is altogether why we firmly believe that we will be able to continue our successful growth course.
That sounds very promising. However, is there anything specific that concerns you about potential risks for Rational?
Basically, we see that our business model is very resistant, even in the most severe crisis. But of course, we take a critical look at the current economic situation in some regions, for instance, in Europe or China. Geopolitical tensions can also negatively impact supply chains or costs, but I think we've learned a lot here in recent years.
Thank you very much for your comments. Do you have any final thoughts for us?
Yes, with pleasure. The Rational story shows very well that high customer benefit has always been the guarantee for success in all industries. And investing in Rational cooking system is always a good investment for our customers. And that's why we are also convinced that a long-term investment in Rational shares is a good investment for shareholders.
For further information, please get in touch with Rational Investor Relations, Stefan Arnold.